Are mortgage rates going up or down? Stay tuned to find out. This video is for educational purposes only and is not financial advice. The speaker's opinions should not be considered as advice from a licensed professional. Viewers should not use this content as a specific inducement to make investments or follow strategies, but rather as an expression of opinion. Follow the rest of the disclaimer, but please do your own research. What up, Tycoons? Welcome to Tycoon Network, where we specialize in trading stock options and providing education on stock market investing to help others achieve financial success. Now, we have the 30-year fixed rate mortgage average in the U.S. This is coming straight from the Federal Reserve. You'll see because we have Fred up here, which means Federal Reserve Economic Data. So this is the daily chart for basically a chart showing what the fixed rate mortgage is. Okay, so you'll see it from year to year. We got 2016 all the way to currently. Now, what's happening now, in my opinion, we have a support level at around 6.62. So it's currently at 688. If it drops below 662, then the mortgage rate could drop to 588. But ultimately, I see it dropping to 4.24. Okay, that might not be, quick. As you can see, all of these moves happened over a span of months to years. Okay, so this is just a roadmap of what's happening and what could happen in the future. So if we ever break below 6.62, then we will get to 5.88%, and then we'll get to 4.24. All right, 4.24 is the target low rate that I'm looking at. I can't tell you when, but that's the target low rate. So we would have to break below 662 in order for any of that to happen. If we're looking at what happened over here from 2016 to 2018, which caused us to have that 2-year bearish divergence that led to a drop in rates over the next 2 years, you'll see that on the RSI right here. Okay, so from 2016 and then 2017, 2018, right? That led to a huge bearish divergence on the RSI, which led to a big drop from 2019 to 2021 in mortgage rates over the next 2 years after that. So 2019, 2020, that was the bearish divergence that led to us having the lowest 30-year fixed mortgage rates in history on January 7th, 2021. Okay, so people might tell you, oh, you can't forecast like mortgage rates and things of that nature with charts. I think that charts can show you a lot if you look for it. So this showed us over the last, not the last, but over a 3-year span, it showed a bearish divergence showing that in the coming years there would be a decline in mortgage rates, and that's what happened all the way to the, once again, lowest 30-year fixed mortgage rates in history on January 7th, 2021, like ever recorded on record. Now, one thing that I see that might be a variable in that, by the way, what's happening right now over the last over the last 2 years, we're actually seeing similar things. So we have a bearish divergence on the same span of time, around 2 to 3 years, which is possibly going to lead to us having another drop in rates over the next 2 years. Okay, so it's only been 2 years, not 3 like it's been over here. But if I just cut off most of 2016 and start right where this spike is right here, that would lead us right to 2017. Actually, like December 2016, we can round it off. All right, so that would say 2 years of that bearish divergence, and then 2 years after that we had that decline that led us to those low rates. So I'm thinking that this year we could start to see that mortgage rate decline, and it could continue to decline over the next 2 years, which would lead us to our 4.24 target that we see. Now, when we're looking on the stochastics, we see something similar to what happened in 2017. All right. Now, what we see right now is similar to what happened in 2017, where it actually went up Okay, mortgage rates rose another 25.38% over the next 50 trading sessions, or around like 10 months, and then they fell. Okay, so we could have another rise over, let's say, 25. Let's say the exact same thing, right? Let's say we have another rise of 25.38% over the next 50 trading sessions or 10 months. That would put us at 8.47 by June 21st, 2024, and then us falling. We don't have to do that. That's just us looking at what possibly could occur. We could possibly go higher on mortgage rates before us finally falling in the month of June. Possibly. That's just an estimate, okay? So we could possibly reach up to 8.47 on mortgage rates and then fall from there over a 2-year span, mind you. So over 24 months, we could fall to that target that I have of 4.24 ultimately. But we want support at 6.62 to break, and then our first target is 5.58 or 5.88, and then below that we have our final target at 4.24, which would make sense as to why you see Blackstone and BlackRock buying up all of these houses and companies that own houses like Tricon and things of that nature. So it would make sense as to why they're doing this, because if you're looking at the data, you'll see it might be a spike over the next 50 months. People might be panicking and things of that nature, but over the next 2 years, it might be a good thing for mortgage rates that start to decline and people wanting to get into more, housing, because it's lower rates and rates are declining and easier to kind of get situated with building for their families. So this is something that we're looking at. We're going to monitor it, and happy trading. Make sure you join our free newsletter, The Tycoon Blueprint. Invest smarter, grow faster. All you have to do is click the link below and provide your email to subscribe. Don't forget to join our exclusive trading and investing community, where we provide a blend of technical analysis and cutting-edge AI technology like AI-powered stock predictive flow channels. We have the crypto alerts for breakouts. We have the stock option callouts by AI. They even give you the strike price and the expiration, along with several other features. We also have the trade suggestions from ourselves, the stock suggestions, leap suggestions, callouts from ourselves, economic data updates, and much more. Make sure you click the link below to join. Here's some of the profits from our trading group. We have from 20% all the way up to 4,000%. Now that's an anomaly, but we also have a couple 100% right here, 500, 160 right here. We also have 50%. So we look forward to seeing you in our trading group so you can get some profit as well. Also, whether you're an expert trader in need of a little help, or if you're a novice and you've never traded before, you want to get our accelerated trading course just for $19.97. We have 3 sections in there: foundation, framework, and finishes. Also having a bonus section with a lot of material that can help you with the investment journey, and it comes with a few ebooks. So this keeps it really simple, hones in on how you can make money now and in the future in the market. So this is really essential if you want to learn and grow. So accelerated trading course, only $19.97. You want to grab that. Lastly, if you or someone you know is interested in futures trading, click that link below for Apex Trader funding and the promo code. Input that promo code for 80% off. Now, if you don't have a ton of money, you can get access to between $25,000 and $300,000 per account. All you have to do is pay a small monthly fee, but with the promo code, you'll get 80% off. If you get 20 accounts for $300,000, that's $6 million in trader funding. And all you have to do is pay $2,000 a month. So you get access to $25,000 for your first withdrawal. And after that, you'll get 90% of the profits that you make. So once again, click that link below, put the promo code in, start trading now.